A lot to unpack in today's episode of the Midweek Market Update. So we know that finally some sellers did appear here in the S&P 500, but there's a lot to talk about in terms of nuance and what would potentially send this market lower. And I hope to give you this key to knowing what that is by the end of this video. That being said, in the S&P analysis and generally a broad market analysis as a whole, we always start out with our sectors. So leading the pack to the downside, since we did have a red day, was our XBI. And when you think of XBI, you're thinking about, probably the most well-known is going to be mRNA, Moderna, who is working on the vaccine, who had a down day today, so no surprises there. After that, to the upside, our XLI was only up 22 basis points, so just under 0.25%. Nothing really to write home about. The XLI is going to be companies like 3M, Caterpillar, Union Pacific, and Honeywell, things along those lines. But more importantly, we always talk about the heaviest weighted sector, the XLK, and that's going to fall right second to last, just under 2% to the downside here in the XLK. And that, the companies in that sector are going to be your Apple, your Microsoft, Visa, as well as NVIDIA's in there as well. So let's have a look at tech. As we've been saying in the weekly watch list for some time now, we know that tech really isn't doing much in terms of its net move. It's just kind of going sideways here ever since, what was this, mid to late summer. So sideways here, but more importantly, if we zoom in, it's really just, right back to where it was just at the beginning of last week, right? So right back, almost no progress in the upward direction. If we look at Microsoft, because that's the second heaviest piece of the XLK, which of course is the heaviest piece of the SPY, here, again, just kind of sideways in this overall range. If we do something like this, just barely starting to break down below that 50% mark. But again, more importantly, in terms of recent move and recent activity, here is your Microsoft range, just barely poking down below it now. So nothing really important there. I would say the most important part of tech and why it was down so heavy, of course, is the obvious elephant in the room, Tesla down around 7% today off of the highs. But what's really interesting here is that this is, it's not in the S&P yet. And this run here is what was driving the Qs. And we talked about in the weekly watch list the fact that the Qs were at all-time highs, but a lot of our tech companies weren't. So it was all riding on Tesla. And when Tesla saw a red day, the Qs would probably see a nasty red day. And that's, what we got here. So on Tesla, just to talk about what might happen in the end of the week here, Tesla has essentially failed back down into this range. So we had a move up and out, and then we had a move back in, which is called a look above and fail, where the target here is going to become that 541.30, the lower end of this balance. And we know, through past history, that when Tesla makes a move, something like this, it tends to balance out for a considerable amount of time. If we look at what happened here, again, a strong move, and then it balanced out for a considerable amount of time. So that being said, I wouldn't be surprised if Tesla does remain in that box we just drew, which is going to be this one right here. I wouldn't be surprised to see it go sideways and chop around this area. I know the inclusion date is going to be on the 21st, which is ultimately down here. But I think this was the run for the inclusion, right? So that's Tesla, and that's why I think, of course, the Qs had a nasty day in the market, and I think that dragged SPY along with it. But so we know tech isn't really doing much, right? Other than Tesla, it's not really doing much. So where is the rest of the risk, and why is SPY up so large? It's going to fall on our second heaviest weighted sector, which is the XLF, and this is the key to whether or not SPY will fall lower this week. So when I said I'll give you the key, this is it. So look at the XLF here first in terms of the index, and then we'll look at some individual companies. This is where the move higher in the SPY has happened, right? This is where it's coming from. Huge gap and poor structure below us here. But if we look at some individual companies that make up the XLF, which is the financials, we're going to look at JP Morgan. That's arguably the largest one in the XLF. If we do something like this, we know that it's been on a nice move, and it had a pretty nasty down day today. I think if it does see more sell-side activity, that's your key, once again, to SPY seeing some more red action. If this uptrend breaks, then your target is going to be right here on JP Morgan back to the top of this prior breakout area, and then anything underneath is going to be to the top of the gap and potentially a gap fill if things truly do get nasty in financials. I'm not saying they have to, but this again is the key to whether or not SPY will continue to see red. Tech isn't doing anything other than Tesla. It's not doing anything. So it's going to be on the financials, and if these cannot maintain this uptrend here that's essentially propping SPY up, then that's where your red's going to come from. If we go to another one, let's have a look at Bank of America. That's BAC. And again, not really a support trend line in play here, but we have clear rejection at a resistance area right here just above 29. If that fails, we should come back down, right? If the support rather breaks at 28.66, a little bit of a flush point, that could be your key here for watching Bank of America for SPY to go, in the red direction, back down to 27.85. And again, a glaring gap in the chart below there. And one more, just so, it doesn't look like we're cherry picking anything. The same thing's going on here in Citigroup. And if we draw a support trend line in on this one, you'll of course notice that this is the one that's pretty much straight up and at the most risk of breaking that support trend line and going lower, in which case that's going to be your target. Let's go ahead and throw a value on that for your trading information. That's going to be around the 57.12 mark. So the key here is going to be financials in whether or not SPY will continue to chug in the upwards direction, or if the banks start to give a little bit, which it would be completely fine, right? This is an impressive move to the upside with no pullbacks. It would be fine to see Citigroup pull back a little bit and take a little bit of a breather. It would probably be a healthy thing at this point for the market. So that being said, there's your key. Let's go ahead and look at some actual strength and what was happening underneath the hood here with our market internals. The main thing that I want to point out to you, and I think the most important here, is the fact that our volume is not impressive by any means. And so all I mean by that is that the sellers aren't really stepping on the gas trying to force this thing much lower. Of course, we know that Tesla drove most of the downside action today, and the rest of our tech kind of followed, but the breadth here was not really that impressive to the downside. It never really got higher than that 5-to-1 negative read there on the NYSE, and of course the NASDAQ was a little bit more red with the Tesla move, but in terms of our volume, it's not even cracking 2 million to the upside, and it's just barely touching 2 million to the downside. So once again, sellers don't really appear to be stepping on the gas. In terms of our advanced decliners, once again, no activity whatsoever in our trend zones, either to the upside or downside today. And today what's most interesting is that we started just below the trend zone. We're positive most of the day, but failing, I will give you that. But we wound up right at zero at parity at the end of the day. So no, again, it doesn't look like the sellers are stepping on the gas in that sense. In terms of our ticks, the first thing I want to point out is, once again, no stepping on the gas. That should be the title of this video. No stepping on the gas to the downside, right? We had no extreme activity up or down on Monday or Tuesday, and our cumulative readings, which is ultimately all we can really look at here, other than those extreme reads, pretty benign and lackluster, not even cracking 2,000 to the upside, or today cracking 1,000 to the, or just barely touching 1,000 to the downside. But you'll see when you have a nice green day in SPY, you're looking at a build here to the upside at around 4,000. So you should, easily be seeing that 3,000, that negative 3 to 4,000 on a strong down day, and it just wasn't the case today. So again, sellers are not stepping on the gas. In terms of our ES futures, let me just expand this for a second, because there is something I want to talk about before we get into the market profile, and that is the fact that if I just clean this up for 1 second, you'll notice, of course, we set a new all-time high up here, but it was in the after-hours session, and markets don't generally like that because there aren't a lot of participants that were able to be involved at that level. So I'm not saying that we're going to, see a massive reversal and just come up and tag that all-time high. I'm not trying to say that, but all I am saying is that they tend not to hold in the long run. Of course, all-time highs end up getting taken out eventually, but in terms of short term and what we can take away from this, it is an all-time high set in the after hours, so keep that in mind. Let's flip over to our market profile, see what we can learn and what's going on over here. I want to just focus on today's distribution first. We do have almost what I would call a double distribution, right? We have one here and then another one sort of developing here. And the point of control, this green line down below, did accept the lower distribution as opposed to the upper distribution somewhere in here. So that is a bearish signal. The next bearish signal we're getting from the market profile is the fact that we have a poor low, and that just means that we have two letters down here side by side as opposed to a single column of letters sticking out something like this. And that just means that the auction to the downside did not end on a bang. Generally, you want to see the auction end on a bang, whether or not it's up or down. Right? If it is truly the bottom, then the buyers are going to get really excited, and we would be left with single prints here as they bought it right back up. Instead, again, they just kind of hung out down here. Value was established lower. Again, the point of control did migrate lower. So that's what we're looking at in terms of market profile nuance. And lastly, to give you some levels to trade off of this, into the end of the week, we did talk about a lot specifically in regards to the sectors and how that's going to play a role into you making your decision. I do want to make you aware of this level. Essentially, today is a low, which, it is a poor low, and we know that it's actually a flush point as well. Look at all the touches that we have here at this, let's just call it 366. We'll round that to a whole dollar there. If that breaks, then I would say, based on what we're looking at, a gap fill is likely, right? That's in between our yellow lines down below. Here, if we trade underneath this 364.22, gap fills down to 363.11, and that's going to bring us right into our daily support trend line on SPY. So I would be watching out for that as a super support, right? So if the banks and financials do start to pull back a little harder, then look for a move into this general super support area on the chart. Whether or not it happens, tomorrow, Friday, or early next week, I would be watching for the financials to take a little breath when we get there. And if they do, then you're looking at a nice little intraday trade there out of a super support zone. So there's a potential trade idea for you into the end of the week. We'll quickly go through our watch list. We talked about the Qs very briefly. Again, they did have a much worse off day than what we saw in the SPY because of Tesla being down so much, coming into a key support, right? The top of our prior balance here. Almost the top anyways. If we do get to the top, I would be watching for some responsive trade, aka a bounce off of that level, especially if the rest of the market is kind of taking a breather as well. Notable volume here, of course, we did break the support trend line, so that's no longer really in play, but we'll have to see if this 300 psychological level holds up. Again, if it doesn't, then look for a little bit lower to the top of our balance here, potential intraday bounce, but if we go lower, we have our 289. That's the area I would really be watching out for because it was such a strong support in here, and our 50 SMA will be there as well here on the Qs. IWM, lastly, our Russell 2000 and the small caps. Let's check in on what's happening here. Our banks and things like that are really going to impact the SPY, but what about the Russell? So here, starting to pull back at the all-time highs. Again, this is more of the market bang that you want to see at the end of the sort of move, as opposed to kind of like SPY and the Qs really that aren't really seeing this this bang, if you will. So here we go, nice strong move to the upside and just starting to pull back, not even really coming down into critical support yet. I'd say we want to hold above that 184.36, the top of this prior balance, to really maintain a bullish stance here in IWM. But of course, the trend is pointing up. We're just seeing a day of pullback. We've seen this story play out over and over again. Here's a day of pullback there. Here's a day of pullback here. It's ultimately going to depend whether or not we fail back down below some of these ranges and start to impact this daily uptrend much more. So that's the sort of quick take on IWM. Apple, we talked about really back to where it started at the beginning of last week. Nothing to really do here unless we break back down into this balance, right? So if we break that 121, look for a move to back test this 119 sort of area towards the end of the week. Netflix, again, coming back down into the range would be the most bearish scenario. I'm talking about this range right here. If we trade back down into that, then Netflix is just playing mind games with me. I've expected this area to break for so long, and it just hasn't, so we'll see what happens there. Tesla we covered, and the fact that it wants to maybe trade back down into this range and just balance out for a little while. Alibaba, let's check in on them. Nothing to write home about. Again, just going sideways, no clear daily trend. Facebook, what's going on over here? Not a whole lot, bouncing off of that 50 SMA, but still well within its symmetrical triangle. I would wait to get active on Facebook now that we've seen this kind of weird candle, right? The range is really large. We're bouncing at support, but we're also getting rejected at resistance. I'm waiting on this one for more aggressive trades anyways over the resistance trend line or underneath our support trend line on NVIDIA. Again, let's see, pretty aggressive sell, but in terms of where we are and where we've been, right back down to this set of lows. If we bounce and trade back down up into the range, then looking for this exact repeat of a move. It will be a look below and fail back into the range, target the 544. If we continue lower, it's all going to hinge upon the support trend line. If that breaks, then look at the 481 for a potential lower grouping of lows. You can see that's from in here, and that would mean tech is starting to move much lower, and I do think that that will continue to drag SPY lower. Microsoft, we talked about them not really doing much, just barely starting to poke below this most recent balance. If we continue lower, we have targets mapped out, ultimately looking for that 208.72, 206 just about from in here. That's a key set of lows, and then anything underneath is 200 psychological. Again, quite a little ways away there, but if the selling does pick up, you're at least prepared. And Amazon, Amazon we didn't really talk about, but Amazon I think is if this breaks down to 3,000, because that's going to act certainly as a magnet for them. But starting to break the support trend line. I'm not going to say that it's broken for sure. We'll have to give it a day, but if the selling does pick up early on Thursday, tomorrow, and into Friday, then yes, 3,000 is going to be the target here on Amazon. And that's going to wrap up this week's episode of the Midweek Market Update. So the key is going to be financials. You have everything mapped out for you. It's really up to you at this point whether or not you want to just sit on the sidelines, not try to time the top, and wait for some more definitive action to the downside, or if you want to get aggressive and start, taking some bearish positions in the banks, bearish positions in SPY, you name it. You have the tools now. Check in with us in Discord. It is linked down below. I hope everyone has a green rest of the trading week.